Scott, thank you very much for the introduction, sound check, and polls. We've got one heck of a presentation for everyone today. I believe it's going to be very excited because there's a reason to be excited. Brad, let's really quick check your sound check to make sure you're there to back me up in case I get stuck in a pitfall.
Well, I just unmuted myself, so hopefully you can hear me. I can hear you pretty good.
I feel like
happy Wednesday.
I feel like I'm sounding pretty good today, Brad.
Yeah, I think you've left the echo room, and yeah, you sound pretty good.
But you and I both know I'm still in the same room. Okay, anyways, before we get started, Brad, Trade Ideas is a publisher. We are not a registered investment advisor, and everything that you're going to be hearing in this presentation is for informational and educational purposes only. Nothing should be construed as a solicitation to buy or sell any securities. Okay, let's get started. Scott was mentioning, Brad, that a lot of the people in this webinar are new to Trade Ideas, and I have to say I love that, because the fact that they're here and the fact that they're interested in the stock market, it lets me tell them a couple of things that sometimes go kind of under the radar. For example, the U.S. stock market is the biggest generator of wealth for people in terms of like on an individual basis. How do you know if Bill Gates has overtaken Warren Buffett? Well, you know if Microsoft's been running. Or how do you know if Warren Buffett's gained on Bill Gates? You know because Berkshire Hathaway has been running. These are stocks. Other billionaires like Larry Ellison, founder of Oracle Corporation. Now, Brad, again, it's the ride of your life, but do you know what I've been saying interestingly? I mean, and obviously this is not intended for you to pick it up on clues, but I didn't say like Larry Ellison had a really balanced portfolio, or Bill Gates had a balanced portfolio, or even Warren Buffett had anything resembling a balanced portfolio. These guys.
Yeah, I wouldn't say that diversification was really their main foray there, right? They were running a company all in.
Well, not only that, but look, we touched upon this last week where we said the election taught us not to listen to people who proclaim to be experts, because sometimes they just don't know what the hell they're talking about. It's the same thing with wealth. The system, well, we're going to talk about it a little bit, but very similar to some of the things you hear, the system is a little bit rigged. And I mean that in a good way and in a bad way. On the one hand, Brad, you've got gigantic insurance companies that take money from us to protect us from terrible things that will never happen to us, and they put it to work in the markets. Then there's like the pension funds and stuff like that. So on the one hand, it's good because money has to go into the markets, but there's this fortress of solitude and information that's around it that basically says you don't know what you're doing because you're not an expert. Well, it turns out the experts have no idea what they're doing either, and all they want to do is charge you fees. It's like, hi, I'd like to charge you a fee. I'm an expert. But, I'm highlighting the fact that the market is beatable. Bill Gates beats it. Larry Ellison beats it, and they don't even do anything in it. They do other stuff. So don't believe the stuff you hear that the market cannot be beaten. It absolutely can. And there's different ways to beat the market. Here's an example of a very, very handsome young man who was beating the market the hard way. I did it by being at the right place at the right time, a long, long time ago, having some predisposition with my ability to take risk, and I learned how to become an investor where I could do what I wanted for a living, invest. And I used that to propel myself to a career in technology and where you see me today presenting to you about Trade Ideas. But look at where it started, okay? So I've been doing this for a very long time. The market has been beatable that whole time, okay?
Technology sure was quite a bit different back then, though, huh?
Oh, well, that's why I said it was the hard way. There it was doing it by bloody noses. But what you're going to see, what I'm going to show you, is the 20-plus years of mine and Brad's, of course, and other people's expertise and our customers brought into our platform. And our platform, this isn't about you sitting there figuring out integral calculus. Forget all the bullshit that you think like it all looks like. That's what we're going to dispel. it's actually simple. It's about first understanding what's possible. So this is what we're going to do today. We're going to show you what's possible. So, Brad, I decided that I really wanted to start simple. This before we really, again, jump into the kind of the demonstration part of the presentation. I want to make sure, is everyone still able to see my screen well?
Yep.
Richard, you don't need new glasses. Don't worry, I'm squinting too. It's designed this way. So,
Hey Richard, there's an ability to zoom and go to webinar. It's I think at the upper right hand corner you should see a little zoom drop down, and you can change the zoom level.
So, Brad, don't mess up my flow.
You're a professional. You can.
It's true. No, it's true. It's true. Every year, okay, every year you're drilled in this message about what you should expect. This is part of brainwashing and control, and I hate sounding like the crazy conspiracy theorist, but I mean, it is kind of true, because you are taught to have expectations of 2%, 3%, 1%, 4%. 11% is insane. Okay, and there's a lot of stuff that's happening now that I'm going to get to. But before I do, I want to point out to this little stock called GBR, New Concept Energy. Okay, and Brad, what is this? We're talking about June, right? So almost half a year ago, roughly. I mean, not exactly, but all of a sudden you see a stock go from 86 cents to $4 in 2 days. I want everyone to kind of digest that from the point of view of returns. Again, the possibilities. Now, this isn't a 1 minute. These are daily bars. So I want to make sure you guys know that I am, I'm not showing you anything crazy. These are days, and there were times that you could have taken advantage of it. But everyone talks about, there's this craze right now going on with shipping stocks that's quite exciting, because again, it's showing people that when supply and demand is off kilter a little bit for various reasons, whatever they may be, and this is the thing that's not that important, the they may be is usually a combination of many things that investors don't really need to concern themselves with. Why do you need to know when all of a sudden the short float ratio hits a threshold where somebody starts getting margin calls, and then they start buying the stock, and then that forces other margin calls, and then all of a sudden a positive news. See, I'm reading all this stuff off, but that's not important for you. For you, what's important is to understand that these things are happening. Especially the new people, the people that have never seen this before. And by the way, it's not one-off kind of stuff. Okay, here's an example. Even earlier, before GBR, and I traded this stock, and I wrote it from $2 from this price level to right around $5. So I was actually caught that. I showed it to people on my Instagram and Twitter and all that silliness so people saw it. But the point is, look at what's happening. Everyone got lulled into this boredom that the market doesn't do anything, and everyone started putting all of their money into these robo-advisors that try to mimic the Standard & Poor's. And meanwhile, there's a whole new other market out there of stocks that are doing very interesting things and behaving in a way that let people take advantage of opportunities. And once again, here you see the small ones that go from 36 cents to $5, right? But let's be clear. By no means is this movement limited to just penny stocks or pink sheets or anything of the sort. Look at, again, Clayton Williams. So GBR was also an energy play. Here's a potential sympathetic play. Look at a stock go from $7, okay, in March to $113. Okay? So what we've uncovered and what we continue to showcase to our subscribers and our clients is that instead of voodoo, magic, and complicated bullshit in terms of why things move, we kind of distill it into a combination of physical components of the stock. Like, for example, you can see that a stock has a float. That means how many shares are available to change hands. You can see like what percentage of that float is being bet against a stock. So this is the kind of interesting part where here, Brad, I mean, what do you see? If you're 40% short Clayton Williams Energy, I mean, either you keep getting short, I mean, this thing could continue to run, is what I'm kind of saying. So what happens is people keep betting against this stock and losing. And eventually what they do is they run out of money. And they have to keep buying more and more. At this point, when you have a float of 10 million shares and 40%, roughly speaking, is short, well, you know, that basically means that 4 million shares are short. And look at it, trades an average of 300,000 shares a day. So these things, these are opportunities that investors like ourselves, while we are not in the mix of, you know, the deal making of the company or anything like that, but as efficient information processors, we see this behavior. We understand that there's internal dynamics that make that feasible, and then we just go along for the ride like a surfer in Maui. There's nothing wrong with that. This is, again, this is what we do with information. We're using server technology and we're deducing opportunity through price-based and factor-based behavior analysis, right? And what you've seen in the stock market for, you know, again, decades and decades and decades, is they keep throwing indicators at people. Try this indicator, try this moving average, try this pitchfork, and here's a bunch of other lines that are called the golden ratio, but we have one that's called the platinum ratio, and it's a little bit different, but look at how much faster it found this stock. These are things that we hear in our industry, I mean, literally day in and day out, and it's horrendous. But the part of the problem is, Brad, and this is the problem that we are so excited about solving, is that roughly speaking, from the mid-90s to 2016, really only one company that's consumer-focused has been trying to figure out how individual investors can beat the market. Not like figuring out how to give you a calculator so that you can figure out how to beat the market. No. Trade Ideas is the only company that's trying to figure out how you can beat the market. And the solution is actually kind of simple and powerful at the same time. Brad, if I may, jump right back to the presentation.
You are in control.
Thank you. So how do we cram 20 years worth of Dan and Brad's and Steve's and Barry's, and again, we have a large team of experienced professionals. How do we cram that in to help us figure out what to do? Well, there's lots of different ways, but partly it's through the method of processing many, many, many practice trades. Okay, we automate the scientific method where we try to figure out, we ask the computer, instead of trying to figure out which company is the best company, which is completely subjective, we try to ask the computer, say, hey computer, if you were speculating in the market, how would you try to win? Think about that question for a minute. Computer, if you were speculating in the market, how would you try to win? The answer to that question lies in a completely different approach to, again, solving this for everyone, which is automating what successful traders do by day. Through our experience and through our technology at Trade Ideas, we were able to figure out how to program our computer to simulate trades, bulk them into groups, and decide what works and what doesn't. And then we, 2016, we launched this as a premium part of our service. We used to have just kind of Trade Ideas, but then in 2016 we kind of changed everything. And what we did was we allowed subscribers to view the AI trade, and what they would do is follow it, because we know, being successful investors, that investing for yourself, it's not one of these things where you try to invest and make 1 penny here or 5 pennies there or even 10 pennies there. You have to kind of go for more bigger moves, and it does require risk. So there's no arbitrage to it. So we try to find these statistical pockets based on large amounts of data where a certain type of behavior is repeating itself. And the AI starts flat, trades during the day. Every trade has potential for long-term feasibility, but we get out every close, so it starts at 0, finishes at 0, and we track the plus and minus as if you were buying and selling one share versus the S&P. And this is what it's been doing. And this is how much people have liked what we've done. This is our subscription growth since launching the AI. But again, for today, I want to get back to showing you a really simple way how we use our data, feed the AI, and at the same time, never miss one of these opportunities like the ones that are happening right now. So I've shown you some stocks, and I'm going to make this view a little bit bigger so you can see it. But let's face it, there's been some very exciting things that just started to happen. So just like, look at this. Hold on, I'm going to go back here. GBR. And I'm going to zoom out. So you see this right here in June. Okay. Well, for the shippers, it's starting right here. And look at this stock. It goes from $1, $2. Go. I mean, it's not even running. I mean, you know, you have to make a decision, but it's not like, oh my God, something happened, I missed it, and it was over. It wasn't over here. It wasn't over here. It wasn't over here. It wasn't even over here.
During those initial days right there, those volume bars became visible. They weren't even visible beforehand. It's just another one of the metrics that we identify, you know, to be able to spot that move super early on.
Right. So I'm going to talk a little bit about that, but first I'm going to show you the names. Like, what are we showcasing to our subscribers? Why are we different? And why is this not FinViz? And why is this not TradeStation? Or why is it that you don't see any of this stuff on CNBC? So look at this. Again, for the people who are new, you know, I don't want to explain all the eccentricities of trying to exactly do what you need. And what I'm saying is I don't want to explain the exact buy entries and sell entries. We can get to that in subsequent kind of discussions. But what's happening right now is so important in terms of percentage returns. I just simply want you to gaze at this and understand that you are here for the right effing reason. Say, Brad, I said that and I wasn't even cursing.
Slipped right by me.
But think about that, guys. I mean, most people, this is their financial life right here. It's very boring. But we bring you this every day.
We find stuff every single day, too.
Okay. And again, you can find every single time that something starts to happen. I designed this window called the Juggernaut, which is basically designed to not be able to miss any of these types of moves, like the shippers and some of the stem cells and everything else that you're seeing. Brad, you know, let me tell you guys again philosophically why you're seeing all of this stuff happening and why it's so exciting. Here it is. So humanity has a lot of big problems that we are trying to solve. You've got cancer. You've got Alzheimer's. I mean, and there's myriad, you know, ALS and MS and all these things. And that's just on the disease kind of side. There's climate change and all these other things that are problems that we have to solve. Well, here's the interesting thing. Do you think for 1 minute that Amgen or Biogen are going to be the ones that, or Merck or Bayer, that are going to be the ones that cure or find the cure for cancer or these things? I don't think so. I don't think it's even going to be close. They're not designed for it. What they do is
No, they're
they
designed to
buy
acquire the company.
yeah, they're the acquirers. The people that do the cancer curing, that's these guys. Okay? And there's never been a better time to be able to see them. You know, and notice again, all of a sudden, when one group of shipping starts to go, now people starting to realize, thanks to us, that all of a sudden there's other shippers that are positioned or structured in a similar way, small floats, you know, things that can be exciting. So that's the kind of vantage point that we want to provide you. We want to provide you a vantage point from which you never, ever, ever, ever miss the best opportunities. I mean, not only do we have them all broken down in various channels that you can view. I mean, this is your Bloomberg, except much cheaper. Not only do we have an AI that helps you throughout the day by literally telling you what to do, how to preserve your P&L, do everything that you need to do. But ultimately, it's sitting on this foundation. It is sitting on this foundation of data. And let me show you a couple of things of how we also find the things that might have not gone yet. Okay? So Brad, what I wanted to do is I wanted to, again, just showcase to not only the people who are new to our technology, but also to our subscribers. Listen, guys, it's not all just about, you know, designing alerts. It's just being able to look through the data in a slightly different way. So, for example, look at, you see here we have these things called position and ranges. So what this is it's a tool that's very powerful and completely underutilized, unfortunately. And I want to show you why. So all of these, right now I have this, if I sort it, okay, and see, like, you can see the columns indented. Every single stock that you see based on my sort here is trading at the upper end of its 20-day range, okay? So look. So remember, all of these stocks, since 1, 2, 3, I mean, even here would be at the upper 20. It's just in the hundredths of the percentiles. But the point is, 20-day ranges on highs. But right next to it, you can see something else. Well, where is it in the yearly range? So this is how you can visualize and have kind of a little bit of a possible advantage in terms of conditioning yourself to see things before other people. So here, for example, you know that if you're seeing strength, this strength in these three is continuing. Because look, 20-day highs are also year highs. However, this guy's a little bit interesting because he's on 20-day highs, but really still hasn't gone in terms of the position in year range. So it's a laggard. So this is where, for example, we at Trade Ideas use our custom price alert mechanisms to be able to say, hey, this looks very interesting. So if this stock crosses 2, which is a whole number, I will instantly be alerted and be able to get into it before it goes to 20. Barry, are you listening? This is how we do it. It doesn't have to be complicated. You just have to kind of see the potential of what is possible. And the beauty of having access to our technology is that it shows you stocks that other people are just ignoring. These things are being ignored. Nobody's looking at them because people have forgotten how to think critically in the stock market. So let me show you again how Brad and I work today to show you a little bit of custom ways that we utilize our data by saying, okay, well, we created a custom formula where we said, show me the volume of the last 5 days divided by the last 10 days so that you can see if something is close to 2, that means it's really picked up steam just recently, which is why, again, you can see stocks specifically that are just on a proverbial tear. And this is something that is, again, a technology that's built inside. It's the ability to do custom formulas. And Brad, will you just high level describe for people what you did there?
Yeah, this is a custom formula, but it's a real super easy, simple custom formula that's taking a look at the volume, the average volume over the last 5 days, and giving you a ratio over the last 10 days. So a value of 2 is letting you know that the volume that's taken place over the last week is really twice that over the last 10 days.
So these are the things that kind of sometimes are not as easy to see when the numbers are so jagged here, you know, because it's hard for people to visualize. We do many presentations where Brad and I and a lot of the people in our company, we talk about the fact that our eyes and the way we recognize patterns is not exactly that good for stock trading, because we assign too much value to something that we see. We're like, oh, well, this is support, you know, but it's like once you zoom out, you're like, oh, this is support. And this happens all the time. It's just like, where is the left edge start and where is the hard right edge? But what we do at Trade Ideas is we demystify all of this. Number one, all of these things that I'm showing you are all things that we provide to you as part of your subscription. We want you to see this. This is not hidden. We want you to be able to access this data.
Hey, how about to that end, Dan? How about let's save it to the cloud and share it with the group?
Sure. So all of our windows, whether it's a charts, and by the way, our software comes with charts, a channel bar, which I will highlight, and a single stock window that you can design specifically to get everything that you need out of kind of like the market to make a fast decision. I recall, Brad, years and years ago, remember we used to do that with like Yahoo Finance. I mean, like we used to have to go there, kind of look at all these things, and now we have it built in where you're like, oh, here's the short float, here's the short growth. So look at this. Again, the reason why I think this is interesting is I just want to point this out. So look at these three things right here. A stock has a float of 13.4 million, and it has a short float of 11 million. I mean, I'm sorry, 11%, and a short growth of 21 million. Well, that means that again, people are doubling down is what I see there, Brad. If you were playing, cards, or isn't that what it seems like?
Yeah, the short growth being at 21%, double that of the short float. Looks like we are, having an increased value there. And
the idea is that whenever a stock is in this situation, right, where it's at extreme ranges like this, what this does is this creates what I call the point of pain theory. So everybody that invests has this thing called the point of pain. In other words, if you were betting against this trade and you're one of these hedge fund guys, you have some money, because most people can't even borrow these. They're so hard to borrow. You've shorted them, and you think you're really smart, and then it goes through it, and you're like, I don't care, I'll short some more. I don't care, I'll short some more. And eventually, what happens is you'll short some more and find yourself at $115 in aftermarket, owing your whole building has been now for sale, and there are hitmen that are coming to get you. Look at I saved this one specifically because, my gosh, everyone talks about it, and I hate that people only focus on one thing, but these kind of percentages are career percentages, they're lifetime percentages, they're multi-lifetime percentages, and they're happening in 3 or 4 or 5 days. And do not assume for 1 minute that just because you're not in this one, that another one won't happen. This is not lightning. That's what I'm trying to show everyone, that these moves, they're not lightning, it's just that the proportions haven't all exactly matched out yet. But they're happening in lots of different things, and it's not just, only even one industry. It's multiple industries, because what's happened is this, ladies and gentlemen, since the dot-com bubble, the public marketplace has been so bad for companies going IPO that most of these companies kind of either reverse merged or did all this stuff where you've got this whole bank of interesting, whether it's biotech or just new, any kind of new technology shipping small float. The float, meaning that what's available out there. You look at that and compare this to what everyone and their uncle already knows. Okay, so look at Apple Computer. You know, not that it's not interesting. I mean, it is, and it's volatile, and it can do stuff, no question. But the percentage moves, you know, 2.7 versus, whoops. You know, did it even? Well, it didn't even finish. Versus 11 on $4 stocks. Think how much more you can move. But back to Apple. The float on Apple is 5.3 billion. Okay, the float on Stem Cell is 11 million. That's why individual investors are here. There's no hedge funds because the hedge funds are not either allowed to, don't know to, and there's no arbitrage here. This is literal, real supply and demand. But to the tune of interest and, you know, helping the market, individuals, the more individuals that are out there, the better the market becomes. It's part of the meritocracy. It's part of what makes investing great. And since you're here, you should be looking at this. These are the places where you should be. You know, the FANG stocks, AMZN. Again, it's not that they're not tradable or that they're not good. It's just that everybody's in them, and look at the jaggedness. And who wants to be stuck in, you know, 40-point, you know, swings up and down? I mean, in one candle, it's nuts. You can now you're trading Amazon at like 5 shares. So there's just a lot more opportunity for the individual in the different names that all the institutions don't cover. Okay? So Brad, did I copy the juggernaut or did I forget to do it?
You have not done it yet.
Okay, so let me do that real quick. Okay, so now I'm going to put this in the chat window. And anyone who is a Trade Idea subscriber, you can have it. So we have the cloud. Any window can be saved. The other thing that's very important is everything that you want, you can create an alert based on our data for you. And this alert can be either a pop-up. Brad, do we? Yeah, I mean, it will either alert you in voice or messaging to show you that, hey, this is happening. So the other thing that I want to add, and again, and this is what it looks like. So these are all the different alerts that I have and I look at that are working for me right now. Okay, obviously these are not triggered. These are the ones that I'm setting up, and you know, you can always look and see what it is that you're doing. See if you need to adjust something. See if there's opportunity. Like for example. On this one, I had set an alert if TripAdvisor, let me move this out of the way, was going to cross above this area. Obviously, it didn't. So I'm going to move this now, and without any emotion, I'll just play it on the bounce. Here it is. It's that easy. The idea is we take a very unemotional approach to investing. We don't shoot for, you know, home runs, even though they're available, and we're very excited to get them. But we just take it one stock at a time, one movement at a time, and see what is out there for me. That's the key. This is the best place and the best time to be speculating in the stock market. We have, so let me jump back into our presentation real quick. We're doing an event in San Diego on December 4th. If you are in town, there's the bit.ly link. Brad, maybe cut and paste that into the chat area so that people know it's about empowering women investors, and one of our friends. Jane Galena is going to be speaking, as well as a surprise guest that's coming, talking about women investing and why it's just terrible that women are so underrepresented in the stock market. They have everything going for them to be fantastic investors, and many women should be taking a look. So, Scott, do you want to jump in, or do you want me to do everything?
Well, it depends on where you're at.
I think we're right here.
All right. Well, what we like to do to thank everyone for joining us is offer a promotional code. And the current code that works is price alerts. It's all one word, all caps, even though it looks like there's a space in there. And that's good this month to take 15% off your first month or year of premium, or 10% off your first month or year of standard. Now, the major difference between premium and standard is access to the artificial intelligence engine, and also unlimited access to our backtesting module, as well as like the very popular price alerts window and other advanced windows like RBI, GBI. But standard's a great way to get started if you just want to get your feet wet in trade ideas and then upgrade to premium after that. So tradeideas.com/price and use the code. Also, to remind everyone, this is recorded, and there will be a email sent out to you tomorrow with a reminder for that. Any questions, you should email us at info@trade-ideas.com.
Yeah, Scott, I want to make sure we answered all of the questions for everybody. Brad, did we catch up?
Yeah, we're totally caught up. I don't think there's anything that's unanswered here.
Okay. Well, anyways, I wanted to make sure that I wasn't like too far into the weeds. One of the things that we, talk about is our live trading room. The fact that every day Barry and our team, they're in there. I don't know why. I thought we had a slide on it, but maybe I just forgot to put that in. But if you go to our website, www.trade-ideas.com, at the upper bar, you can see it, easy access to our trading room. Barry is there all day, and he helps everybody kind of do the best practices of how to interact with the markets and our technology, and it's a constant learning environment. And one of the things that we always say is we ourselves are always learning from the market. Today it's the shippers, tomorrow it'll be some other stock groups, and we just have the best tool to take advantage of it, and you're here for the right reason. So again, try it whichever way you want to try it, but this is the time to be an individual investor. Thank you very much.